Crypto regulation. The global landscape in 2025. Welcome to Global Mix. In this video, we explore the evolving global landscape of cryptocurrency regulation in 2025, with governments, financial institutions, and blockchain developers increasingly intersecting. It's more important than ever to understand how regulations are shaping the future of digital assets. From the US to Europe, Asia, Africa, and Latin America, we'll uncover how different regions are approaching the regulation of this rapidly growing industry. Why crypto regulation matters? Cryptocurrencies initially emerged as a decentralized alternative to traditional finance, but as their adoption has grown, they require regulatory oversight. Key reasons regulation matters. Consumer protection. Prevents scams, rug pulls, and frauds that have cost billions globally. Tax compliance. Helps governments track crypto gains for revenue and audit trails. Institutional confidence. Encourages banks, hedge funds, and pension firms to enter the market. Legal clarity. Provides developers and businesses with certainty to innovate without fear of sudden legal repercussions. Anti-money laundering, AML, supports efforts to track illicit financing, terrorism funding, and cybercrime. Regulation, when smartly crafted, can act as a bridge between decentralized innovation and traditional finance. The United States, the U.S. remains a battleground for crypto regulation due to overlapping and some SEC seeks to regulate many tokens as securities under the Howey test. High-profile lawsuits against Ripple, Coinbase, and Binance have set legal precedents. CFTC claims Bitcoin and Ethereum as commodities, prefers a lighter regulatory approach, but lacks apparent authority over most tokens. IRS requires capital gains reporting for all crypto trades. In 2025, tax forms will include a separate section for digital assets. Congress. Proposals, such as the Responsible Financial Innovation Act, aim to establish a unified regulatory framework. Stablecoin regulation. Bills are underway to ensure reserve backing, audits, and federal licensing for stablecoin issuers. 2025 is seeing progress toward unified legislation that defines digital asset classes and responsibilities. European Union. The EU is a global leader in crypto regulation thanks to the Markets in Crypto Assets MiCA legislation. Applies uniformly across all 27 member states. Requires white papers, asset classification, and transparency from issuers. Imposes capital reserve and anti-money laundering (AML) obligations on stablecoin providers. Introduces environmental disclosures for proof-of-work assets. Streamlines licensing for crypto asset service providers (CASPs). In 2025, MiCA provides regulatory certainty for European exchanges, wallet providers, DeFi protocols, and token issuers. France, Germany, and Portugal have experienced significant growth in crypto startups as a result. Asia-Pacific region. Asia presents a fragmented but highly influential regulatory map. China maintains a sweeping ban on decentralized crypto trading and mining. Focuses instead on deploying the digital yuan, ICNY, at scale. Actively monitors blockchain tech for surveillance, social credit, and government supply chains. Japan, early mover in crypto regulation. Regulates exchanges via the Financial Services Agency, implements stringent custody and cold storage rules, encourages Web3 innovation in partnership. South Korea enforces strict anti-money laundering standards, created a dedicated digital asset committee to oversee regulation, implements investor protection policies such as requiring insurance for crypto platforms. Singapore, leading fintech hub with a favorable stance toward innovation, licensed under the Payment Services Act. Actively screens crypto firms based on financial soundness, governance, and consumer safety. The Middle East and Africa. United Arab Emirates (UAE), a global pioneer in crypto-friendly regulation. Dubai's VARA Virtual Assets Regulatory Authority oversees licensing and compliance. Free zones, such as the Abu Dhabi Global Market, a DGM, attract exchanges and fintech startups. Saudi Arabia. Conservative stance but engaging in CBDC testing under the Project Aber initiative with the UAE. Digital asset services. Nigeria, previously banned crypto, but now recognizes its economic role. The central bank has launched the Naira, a central bank digital currency. Exploring sandbox regulatory models to foster innovation. Kenya, high crypto usage rates due to remittance demand. Working on digital asset taxation and legal recognition. Africa is leveraging cryptocurrency to address real-world issues such as inflation, cross-border payments, and financial exclusion. Latin America. El Salvador maintains Bitcoin as legal tender, alongside U.S. issuing Bitcoin bonds to fund Bitcoin City and geothermal mining. Building infrastructure for retail payments and wallet adoption. Brazil passed legislation regulating crypto service providers. The central bank is piloting the digital real CBDC. Argentina, informally using stablecoins due to inflation. The government is now proposing legal frameworks for crypto taxation and investor transparency. Mexico, early adopter of fintech laws that cover crypto, exploring central bank-backed innovation platforms. Latin America views cryptocurrency as a strategic tool for facilitating remittance flows, hedging against inflation, and driving financial innovation. Global trends and the road ahead. Across the world, these regulatory trends are emerging. CBDCs, over 100 central banks are piloting or studying central bank digital currencies. Stablecoin frameworks. Global regulators focus on solvency, audit, and governance standards. Interoperability laws. Calls for cross-border compatibility of cryptocurrencies. DeFi and DAOs. Authorities are seeking to define the legal status and accountability mechanisms. FATF guidelines. Countries align policies with Financial Action Task Force standards, including the travel rule for crypto transfers. The goal is to strike a balance between consumer protection, innovation, and systemic safety. A challenging, yet necessary task. Conclusion. Crypto regulation in 2025 is no longer a fringe issue. It's a central part of how global finance evolves. Whether you're a trader, developer, or investor, understanding how your country approaches regulation is crucial for making informed decisions. Thanks for watching Global Mix. Please let us know how cryptocurrency is regulated in your country in the comments. Be sure to like, share, and subscribe for more deep dives into the future of finance.